How long do you think this lasts, and what can governments and businesses, what can and should they be doing right now?
Well, look, we have to hope that this isn't like any normal job number. The thing that level is lower than at the height of the Great Depression, but in terms of the speed at which it happens, it's worse than the Great Depression. The worst year for unemployment in American history, the unemployment rate for the year went up a little less than 8%. We just went up more than 10% in a month. So I think we have to hope that this is not a normal business cycle and that it's not going to take us more than a decade to work this thing back down. If the government and the individual states can make sure that people don't get evicted, that people don't have to liquidate, and if we can get control of the spread of the virus, hopefully there's at least a chance that we can come back if not to normal, at something like a much faster pace than we usually do. But this has got to be the most heartbreaking day in the history of the job market.
Yeah, Glenn, it's not a surprise. We knew this was going to be a very difficult number. We knew that this was going to be something that we were looking at, massive numbers, tens of millions of Americans without jobs. How about you? How quickly do you think we can turn this? How long does this last? Because there have been some reports out there suggesting that it might take 5 years or longer before we can get back to the levels we had been before. J.P. Morgan was even saying 10 years. What do you think?
Well, I do think this is a heartbreaking day in the labor market. Each of these stories is human and personal, about employees, about small and mid-sized businesses. I think we could be back to the same level of GDP by late 2021, early 2022. That's not a good news story, and it could well be worse. What we need is government intervention to continue. And I would start in the second of Austan's points. We've got to focus on the public health aspects first, the testing and tracing, and then see what it needs to be for a gradual reopening. And that's probably going to require continued support for businesses and employees during that period of reopening. Government really has to get its act together. And I say government, meaning both the federal government, which will provide a lot of the funding, but the state government, where a lot of the action will occur.
Hey, Kate, let's take a moment to acknowledge the market's reaction to this. The Dow's indicated up by more than 220 points. Again, not a surprise that this number came in. We shut down the economy on purpose to try and tackle the pandemic. But the bigger questions, again, still remain about how we get back to it, how many companies shut down in the meantime, particularly small businesses. So the market's reaction today is what, in your sense?
Well, look, I mean, I think we've been having this debate for a while on the disconnect between what's been happening in market pricing and the really horrific news on both the economic data and the fundamental kind of earnings data. You know, we know that stuff is bad and getting worse, and yet the market has been shrugging it off. And certain sections of the market have continued to really rally. Some of that is around positioning and short covering. I'm thinking specifically around energy. And as people kind of rebalance their overall sector allocations. But some of it is trying to look through this noise and say, OK, when we come out the other side, who are the winners going to be? This is a really challenging exercise, and it's very difficult to predict the timing. At this point, I would say the market is really moving on the better news in three areas. One, slightly fewer infections and slightly fewer deaths, gradual reopening of the economy. And then the third, of course, being the U.S. and China having a slightly more constructive talk. I would say over the last 24 hours, that's had an impact on market sentiment. But, you know, I think others have made this point that's really important. We need to continue to get government and policy support in order for the market to move forward, and for us just not to be reacting to some slightly incremental better news flow, but to something that's more fundamentally driven.
Hey, Rick, the bond market has gotten plenty of support from the Federal Reserve. What do you think? What are you kind of hearing from people in the bond market?
Well, definitely. The Federal Reserve has done a great job. They've cleared a path for investors to follow right into purchasing securities that may go into negative interest rates. So, yes, the support's a good thing, but it's a good thing up to a certain point. We got down to 11 basis points in a 2-year note. Many are worried that the buying, kind of front-running exactly what you're discussing, could put it negative. Market-driven negative rates. It happened in Fed Fund futures yesterday, depicting that investors think it's possible. This is where forward guidance comes in big time. Federal Reserve needs to nip this in the bud. And you know what, Austin? This isn't really a horrendous number. You know what a horrendous number is? When you predict up 300,000 and you get down 22 million or 19 million. When you predict down 22 million and you're down 19 million, what that means is that it isn't the intent of employers to fire for bad business. It's not because there's malfeasance in an industry or that they need bailouts because they did horrible things. This is the government's jobs report. The governments of the world chose to deal with the health issue by putting people out of work. It's a huge semantics difference. And whether it takes 5 or 10 years, everybody on this panel has their own opinion. But the market has an opinion, too. And from my perspective, it doesn't look like 5 to 10 years.
Hey, Mike, I think that's a big part of the question, Mike Santoli, is, I guess, the permanent damage. The big companies are going to be able to weather this. They have taken the steps. They've gotten access to the capital markets. I think there's still a question about what this means for small businesses, places that can't necessarily ride out another few months of a shutdown, and what happens to those jobs, or if there's a way back, a path back, or a path to hold them over. What do you think?
It's obviously not clear. I mean, half of these jobs lost in 1 month were for leisure, hospitality, and retail. That's exactly the part of the economy we just have no firm sense of how fast and how fully it returns. But you're right about in terms of what the stock market does. It does not capitalize the experience of the median household in the country. It essentially is mostly dominated by very large businesses that do have the wherewithal to weather it and also, in some cases, benefit from this environment. So I don't think it's very clear. I think also the market has benefited, in addition to all those things Kate mentioned, from this idea that the fiscal support has come without the markets getting impatient and having a tantrum over it after that first initial shock. So in other words, you've gotten these waves of support. The market's almost willing to bet that it'll get lucky, that some of that will be enough to cushion the blow. And maybe it was mostly a 7-week shock, an 8-week shock, and it can seize upon the incremental direction of change being positive in terms of returning. It's a big bet one way or the other. And I don't think right now anybody has a clear enough view to that end point. And when we're back to a similarly vital economy that we had a few months ago, right now we're willing to set that question aside if you're investing right now in a near zero interest rate environment with a lot of Fed support.